Welcome to the webinar for Pasture Holdings. I'm Justin Sleva, fund manager. If you look off into the pictures, you can see Trevor Probant and Beth Pianori, the dream team I have with us, and it's great to be here. We're going to talk, is land investing the secret weapon for your stress-free retired life? First off, I want to say thanks for your trust in checking us out today. We've had 5 offerings in the last year. We've been around. 2 have gone full cycle. And the last, our passive income note portfolio tranche is almost full. It's got a little bit left there, but we're excited to see how this has grown over the last year, the trust that the investors continue to show for us, and how we continue to get proven returns for them. So it's great to see. And I'm going to let Trevor take off for a little bit on it, and then we'll get back into it. So what you're going to learn today in this webinar? Tell them, Trevor.
Hey guys, what we're going to talk about is the potential of land investing, especially for retirees. Talk about discovering, secure passive income backed by actual land, something that we know extremely well, right? And what we're really focusing on is that truly passive income for our investors backed by the best investment on earth, the land, right? So next one, please. Who are we, right? Justin introduced us a little bit beforehand. Justin, myself, Josh, Beth, everyone has done real estate investing for a very long time. We, within the past year or so, decided to all come together and turn this into something that's going to be for the long haul and going to change a lot of lives for the better. So, like I said, we've done almost 10,000 acres of work all together. And so we know what we're doing. So go ahead. Not, this is talking about what retirees are looking for, but to be honest with you, this is what kind of everyone's looking for when it comes to the investment side, right? Diversification. Most people are told or put into stocks, bonds, paper assets, Wall Street, right? Very few people actually get into private equity, alternative investments, hedge funds, that right there is a type of investment that not the everyday person has the opportunity to get in with, right? One, because of the high net worth barriers, but also you got to know somebody, to be honest with you, right? And so that's what we're trying to do with our fund, is to bring that kind of opportunity to more people that maybe wouldn't necessarily have that, right? Risk management, right? Looking for a way to bring down your risk adjusted, rate of returns on your property. Long-term growth, obviously we want to grow our investments because as life happens, we understand, especially right now with inflation, right? Our money has to grow and stay above those things, right? Liquidity, obviously you want to keep some cash, right? Everyone wants to keep some cash on hand for the rainy day or particular things. The bad thing is when it comes to cash, it's not out there working for you, but we always have to keep a balance, right? This is what I really like, right? Like, your structured products, your CDs, things like that. That's all fine and dandy. Those are guaranteed rate of returns, but they're not great as far as your overall return. Again, risk adjusted returns, right? This is what we're really talking about, right? Private placements and alternative investment. Accredited investors may be able to have access to private placements and alternative investments that are not available to the general public. This is who we are, right? This is who we're talking to. This is what we do. Private equity, hedge funds, real estate partnerships, venture capital funds, all these things. This is what Pasture Holdings is. And this allows you to get, kind of behind the scenes of the everyday investor. So that's what we're really talking about. Why consider diversifying with land in your retirement portfolio? This is the whole impetus of everything that we're doing, guys. Post-COVID America has become less dependent on in-person work, right? Technology has freed people from the constraints of large metropolitan areas. This is a story. If you haven't done it, you know someone who has, that moved out of the city so they could have a better work-life balance. This is a huge, huge thing. And, this whole new geographical reality that has destroyed commercial real estate prices, right? We literally just had the largest building in Fort Worth sell for $127 million less than it did 5 years ago, right? That destruction of value has been sent out and spread out across this country. into what we're doing, right? A result of COVID-19, people want space for their families, activities, well-being. Like no one or very few people, especially millennials, now that we're coming into this age where they're having children, people want space. People understand the well-being that nature has for them, right? Because of that, the entire value of land prices in the United States on average has doubled in the last 10 years. Most of the areas that we're investing, especially in Texas, it has doubled in the last 3 years. So because of that, next one, please, sir. History of land investing, right? Mortgages were invented through the sale and purchase of land. That's the whole basis of what American real estate investing is, right? Land is the backbone of all real estate transactions. You can't build on thin air. We know this, right? All commercial, residential, and recreational real estate is land based. Everywhere that you're sitting watching this is based on land, right? It's everywhere and everything. Land affordability today. This is what we're talking about, right? This is the whole dream of what we have with Pasture Holdings. Everything that we do is based on this right here. The demand for land continues to rise while its affordability continues to fall, right? We just talked about that. 3 years, prices doubled. 3 years, prices have doubled, right? In the state of Texas. These newer higher prices, right, have caused a lack of affordability for the everyday land buyer. This lack of affordability would cause by land buyers to seek alternative options to fund their land purchase dreams, right? The way that you can't come in, even the everyday person can't come in and buy a $3 million piece of land, even if they want the 150 acres. It's just not, it doesn't make sense for folks. Because of that, this is where we come in with a passive note income portfolio that allows the affordability and the buying power for everyday people to actually achieve what they want to when it comes to land.
So I think that's great, Trevor. Thanks for that. Our opportunity with land notes is massive because I don't know if you've ever tried to walk into Wells Fargo and say, "Hey, I want to go finance this piece of dirt in the middle of the country or 2 hours outside of the city limits." They just don't understand it. And so it's a perceived higher risk for most big banks. It's less liquid than a single family house because it's not the market that they use. They don't have all the data around it. And the guidelines only allow certain fees based on percentages of the purchase price, making it the risk reward. So if single family investor and you remember the 1% rule, I've got to go out and flip it and I'm going to try to do 1% of the mortgage, and Wall Street can buy that tape and understands what that's going to be because of the amortization schedules and the long loan terms. So what we found is one of the biggest vacuum opportunities in the country right now is this owner finance piece. There's billions of dollars of equity trapped in raw land across the country. We all have a grandmother that had a piece of property that passed it down to our parents that maybe came to us. And this is that land that's there. And it's coming back to the market as some people want to get rid of it and turn it to the next family. And we're there to provide that resource that they need. You know, our residential buyers, Trevor was sharing with me earlier, he was to get his hair cut. And the lady cutting his hair was talking about how they just got their 5-acre property just outside of town because they moved a mobile home onto it. Perfect example of what we build within that 90 minutes of the major metro area. She's still able to go into work. She has 5 acres now. She can build her homestead and she can really enjoy the fruits of having a farm, more or less, or more space for her kids in an affordable house for less than what she'd pay in the city. So it's a huge push to see these micro farms and these things of that nature. 20-acre tracts. Recreational buyers are loving the 20+ acre tracts because it's at a price point right now that they can afford to buy it, put their camper on it, put a cabin on it, and really enjoy riding their ATVs and getting back involved with nature, like so many of the families want to do today post-COVID. And now it's a piece for them to have a piece of American dream. So what is owner financing and what are we talking about? We actually become the bank, and landowners are often able to sell their land via owner financing to work directly with the buyers and not banks. And it allows for a quicker, cleaner closing product. It allows for us to originate promissory and mortgage notes across the United States because we're not stuck to one geographical area like a bank would be. We're able to do this across the country and follow the guidelines for each one of those states. So when we buy these notes, we work with investors that are doing what we do across the country. Myself and Trevor, we've taught hundreds of of people how to buy and sell raw land, and informed them using our podcast. And so what we've done is created these investors out there that are creating these great assets and these notes, and they come to us because they want the cash. They can't wait the 15 or 20 years for the note. So we usually buy these at 75% of the unpaid balance, meaning we create instant equity right off the jump. And that arbitrage is passed on to our investors. And that's why they're able to get the pref rates, and we are able to charge no fees on the front end. Purchase price averages out to about 65% of the market value, the market value, meaning there was a down payment, it sold for a price, a down payment paid, and then we're actually paying 65 cents or less on a dollar for that property, which means we have less risk. We talked about what do retirees want. They want diversification. A tranche of notes does that. They want less risk. You're buying it under value, and we're not having to play a debt game because we are the bank in this situation. So what does 65 cents less of market value exactly means? Means we have 35% of equity on day one. Now, our due diligence and risk mitigation, when we come into it, we talked about risk mitigation and that we have multiple
3-0.
We have multiple things that we look at, things like access, utilities, geographic market, comparable track sales, and attributes. Since we've been doing this across the country for so long and doing it virtual, we've been able to put together data and look outside of what normal big banks do, and we can see what the trends are, what the prices are selling for, and work directly with the land brokers that we have relationships across the country with. So we have kind of our proprietary way to look at these, and allows our due diligence process to lower the risk for all involved. So the passive income note portfolio offering, and it's really the cusp of why we're here, meeting the needs of the accredited retiree. This is one of those things that's diversified because you have multiple notes inside of it. It's not based on one asset. It's spread across the spectrum. We've actually put our money where our mouth is and bought them early and watched them perform for a year. We're not using it against debt, meaning we don't have to go to the bank and ask for permission because we are the bank in this situation. We control the lien on the asset in the first lien position. And for our investors, we've made it really attractive with an 11% preferred rate. And that's an annualized rate that's paid to you monthly from your start of your second month there. And then it's a short-term hold period. It's 9-month hold period. When a lot of times when you get into retirement, you think CDs, that structured payment over the course of a long period of time, but you're locking your money up. Hey, it's a 2-year CD, a 5-year CD. We are doubling the current rates of what CDs pay, but allow you to have your money locked up for less than for half the time, 9 months. So what that means is at 9 months, if you like getting paid, you keep going and we keep you moving. If you want to get out, you pull it out, you go on the vacation to the Bahamas, and you say, hey, what, Justin, let's get back in here. I'm ready to go again. And we lock you back up for another 9 months. So the liquidity piece, the monthly payments help generate cash flow. And the way we're able to do this, since we have so many loans spread out, it comes into us. We've had him cash flowing since August of 23. This allows for us to have predictable cash flow to pay our investors. And I'm looking at a different webinar on another screen right now. The screen's all around me right now, but it's on apartment syndication, and they promised cash flow to me as an accredited investor. I put money into it, and now they're asking us for more money, but they haven't paid us since July of 22. And that was one thing that really stuck out to me, is that if I have a person, like if I retired and I have this relying on this cash flow that you're promising me, and you don't deliver, it makes me extremely nervous. And so we built our note portfolio to circumvent those risks, to bring down the risk on that. And as our chief operating officer says, the worst thing that happens to us as a company is that people pay their payments on time. Now think about that for a second. We pay our payments on time is the worst thing that happens. The best thing is they don't. We resell it and we have a huge profit margin because we have that built-in equity from day one. So do we want the 10.9% we're charging them on their note, or do we want the 35% plus equity since they've been paying us plus the interest they paid us? And that's why we really like this passive income note portfolio, and why it really does wonders for us across the spectrum of what we see out there in the current market of investments. Now, long-term growth, like I said, you can reinvest after the 9 months. That's not a problem. We hope that you like us and we hope that you stay with us. That's why we're having it, because we're newer. We've been around a year as Pasture Holdings. We've been doing this. I think I'm the the newest in this, and it's 2016s in my land investing journey. So 8 years in that, and I've been doing it full time since then. The idea is we want you to work with us long term. We're looking for long term growth and bringing some of the institutional style money to Main Street America, because we think that it's missing. Everybody gets stuck on what institutional money can do for people, but they don't really remember how Main Street intersects across the road, meaning person wanting to sell, person wanting to buy, and how do we bridge that gap without having corporate America in the way? So we're going to open it up to any questions, and I hope that we have some. If there's something that you want me to go back over or hit on, I'd love to answer it for you. A couple things, like I said, we have offering 5 just closed up. It filled up in 10 minutes, which was amazing to us, because one of the big things you look for when you're running a fund like this and you have the different offerings is how many people invested in the deal before and came back and got into the second deal. We had people holding their money back from distribution so they could be ready to jump into it, and that's why they were ready to go in 10 minutes. And that's amazing to me. It shows us the trust that we've built over the last year with our investors, and we've continued to see the returns. So, I'd love to open the floor to any questions. You can type them in the box. I'll answer them, or Beth or Trevor will answer them. If you'd like to get to know us a little bit better, we'd love to talk to you and have an open conversation. Hey, Spencer, we see you joined in there. We appreciate you getting on the call today. Hey, Beth, anything you can think of that maybe we didn't hit on, myself or Trevor?
Justin, I'm not sure if you can see it, but there's a few questions in the chat.
Okay, no, I didn't. I got it now. I'll pull it up. What are the fees on this investment? That's a great question. There is no fees. We talked about how we were buying the properties at undervalue and offering a percentage below what the note balance was. So we take our fees, and this is one of my favorite things about Pasture Holdings, is we're paid on performance. So I get paid on the negotiation of that arbitrage, meaning if I buy it at, say it's $100,000 note, I'm going to try to buy it at $72,000 to $70,000. I'm going to pay you the 11% annually. So let's say that interest rate on that thing is 10.9. Now, anything over that, the interest and the principal that comes back on that, we will arbitrage against it, and that's how we get paid. So no, there are no fees on the investment directly to the investor. It's what we arbitrage and we negotiate on the back end across that tranche is how we get paid. Second question is, where are the properties located? Another great question. They're across the United States, and that's one of the things about our background in land investing is we've bought and sold. Myself personally has bought and sold in over 45 states. So what we do is work with local title companies and attorneys to make sure our mortgage documents, the promissory notes, and everything matches what is required by the state. And so we are kept legal there and able to move forward. And a lot of these notes we're purchasing after they've been originated, so it keeps us from having to originate too many, because with land investing, there's a threshold that you can't originate more than X amount of notes in a calendar year. Another question here. I'm in an apartment syndication for tax purposes, but it's performing terribly. Are there tax benefits to land notes? So land notes are a little bit different than apartment syndications, 2 different worlds, but we're going to get a pref rate if you're a professional real estate investor or a professional in real estate. And most people that have W-2s or retired are not getting their hours in that's required for that. Now, there are some tax benefits when you are investing in a land note because of the interest. Now, if you're an investor that's from overseas, interest comes to you tax-free. That's one of the cool things about maybe being a French citizen. We have some in our investment group that they're a French citizen and they actually live in the Dubai, and so they get all the interest portion of their income off that land note. It's tax-free for them. So there is some tax benefits. Typically, it's just taxed as a regular income, but there is some tax benefit in certain situations. Great questions.
And that's another thing too, right? Like, we all understand that, if you're not a real estate professional, you can't write off certain things, and you can do a accelerated depreciation of your assets, right? But we all know that that's not saving you tax. That's kicking the can down the road, right? You will recapture those taxes unless you put it into something else, right? And then and that's how those apartment indicators work, right? They're like, hey, I gave you a 17% IRR over 5 years. It didn't cash flow worth a damn, but we found another moron that was willing to buy it at a time basis. Now, for you to actually keep all that money, now you need to put it in with our next one, right?
Yep. Oh, that's perfect. Yeah, and that's one of the things is yeah, that's the term they use to pretty that up is generational wealth. You're just going to continue to kick the curb down to get to the next generation, and they're going to be stuck with your taxes. And I don't know that my kids are ready for the taxes I hope to leave them. You know, that's kind of what you hope for, is to leave them with a ton of income, so they may have to figure out how to pay those taxes. But no, in all seriousness, we want to be honest with the honest conversation. We're not going to sell you on the buzzwords, the fees. And I'm glad that question was asked, because I want to revert back to, we went to a fund meeting a couple weeks ago, myself and Beth did, to meet with some other fund managers and just kind of see what the vibe was, because our fund is different. It's land centric. We don't take fees. And hearing some of the fund managers talking about their acquisition fee, their due diligence fee, their purchasing fee, their disposition fees, and they're like, oh yeah, we're doing all these fees. And I'm sitting here going, if you want to be if you want to be so fee centric, like, what are you doing for your people? Like, how does that bridge that gap of Main Street? Like, how do we get both sides of it?
Well, here's the reason why, Justin. You know this, right? And Beth also, is because what they do doesn't make money.
Yeah,
they have to, right?
They have to generate.
This is sharing profits. What we do, right? Like this is not. It's so tight, especially these apartments, things like this, right? There's so much cheap money, or has been so much cheap money, that they know that they're not going to cash flow. I've got a very good friend of mine that owns 6,000 apartment units all over the place, right? And he, like, whenever he shows me deals, and it takes, the whole reason that a deal happens or doesn't happen is the first 2 years of being interest only on their funding. That's too tight. We don't have to worry about that with what we do, because again, we talked about that lack of liquidity into the marketplace. It causes a vacuum. We're filling that, and because of that, we're getting rewarded with outsized returns.
Yeah, no, it's great. Robert asked a great question here. Do you have to be a accredited investor? And yes, you do. That is one of the things about the way we've set our fund up, so we can have these webinars and talk to you. We have to advertise to accredited investors. And that's, a lot of people have looked at that and were confused on what that actually means. If you have a question on whether you think you could be accredited or not, we'd love to answer that. Look at your situation. But we had a really friend that had worked with. I say friend. I mean, most of the guys we work with as investors or investees, where we joint ventured with them. We were going through his portfolio with him because he wasn't sure. His wife told him no, they weren't accredited. Honey, I don't know how much money we have. Are we not accredited? And he goes, Justin, I just don't think I am. And I said, well, you just told me you bought $500,000 in land, because he invests in land as well. And I said, you have $500,000 that you invest in land. What's it worth? And I said, and did you take any debt? He goes, no, we paid cash for it. And he goes, I think broke up, it's worth $1.2 million. And I said, okay, great. So an equity basis on your financial sheet, you're worth $1.2 million with that. Now, there's other things that go into that, minus out your debts and everything like that. But, for simplistic terms, he didn't even realize that provided him with that type of equity on his balance sheet. So, we can help you that, or point you in the right direction to see and answer any questions you can if you have on that offline, so we don't get into too deep into your personal situation on the public forum. But great question. Thank you. Cool. Few more minutes of open conversation. We'd love to have it, and we appreciate, again, y'all joining us. One popped in here. Do we have any new offerings coming up? We've got a little bit left in the tranche for the passive note portfolio. With May 1st was the 9-month tranche lock-in date. So we're going to allow some people to come into that. They won't be locked up for the full 9 months if they do. After that, we have gotten, I don't know if I'm allowed to tell you, but I will go ahead and share a little bit of this. We had our final inspection out on a property. We look like we're going to have a subdivide in Haskell County, Oklahoma. It will be effectively known as Haskell 70. It is a beautiful property right now. It'll get a little bit of our love with some cleanup on the fence lines, driveways, and it'll turn into 7 10-acre lots that will be beautiful. The good thing is we are going to make the investors the bank on that, so there's no outside leverage. It'll be internally owned by the investors in the fund, and there'll be a pref rate and an equity kicker for the back end. Those things fill up so fast. I wouldn't put it past the current group that has been investing with us that they try to sell it out in no time flat. And it'll have a minimum investment like the notes do, which the notes are $25,000 for your minimum investment. That'll have a $25,000 minimum as well. And we look to see people work together and that 25,000 minimum to get them in and get them going.
And you can also, guys, the platform that we use, the Avestor platform that we use is for the investor portal. It allows you, if you've got a certain amount of money that you want to put into the notes and you want to hold a certain amount that you want to put in for a subdivide opportunity, you can always do that as well.
You can always split those up. The best way to stay up to date, Spencer, thanks for your question here. So what's the best way to stay up to date for upcoming subdivides so we can get our name in the first 10 minutes? I'm going to let Beth answer this one. I will say that the best thing is to be to actually have your accreditation and everything filled out. But Beth, I'm going to let you answer that which way, because Beth is our behind the scenes. She does everything. She's the glue that keeps us all together. She is our superwoman. But you know, I'll let her answer how she thinks the best way would be for that.
Spencer, thanks for your question. So many of our investors ask the same question of me. And truly, it's just going to have to be the first one who gets to it. So what we will do is when we do have, you know, a possible subdivide opportunity, it goes through such due diligence underwriting. A lot of them don't pass our checklist and don't make it. But once they do, the team gets working on the marketing. I put together the pitch deck. And the first thing I do is I load that into Avestor. Once everything's loaded, the offering documents are there, then that gets posted up on social media, as well as an email blast that goes out. The tough thing is if you're not, you know, at your computer when that goes out, or you don't see the social media pop up, you know, you might be a couple of minutes, an hour, a day, you know, too late. You know, we may look at doing a possible, you know, text message out to, you know, all the people that we know are super interested. But it is a first come, first serve. But do, like Justin said, make sure that for all of those who have the same question, make sure that you are accredited, your accreditation letter is loaded, make sure that your registration is in, that you're approved investor. That way, when these opportunities pop up, you are not left, you know, in the wind. So I hope that answers your question. I'm sorry if it's not the answer that you wanted, but we do want everyone to be able to get into these deals as they come through.
Yeah, that's great. And that's the hard part is they don't come out like first Monday of the month. We're going to launch it, a new one like that. The one coming up, we've talked about doing a kind of a live type situation like this. And those on the live, we'll go through the due diligence checklist, what we've looked at, what we've checked, and allow you to be kind of educated in kind of the behind the scenes of what we're doing and why we do it this way. And then if you want to soft commit right then, because that would be the culmination of that call, is the call to action would be, let's get you investing if that's what you want to do. So we're looking at that and what that looks like. But we don't want to slow anything down based on our lack of production ability for it, which is made up tenfold by our ability to cut up land and to find these notes and put them together and generate an income. And Beth, our two offerings, and correct me if I'm wrong on these numbers, but I think I'm going to be right. We have an average on the two deals that closed, average of 61 days turned at an 18.6% cash on cash return. So 18.6 on 60 days. So, you know, that's an amazing return. Annualized, I want to say that's up in the 60 percentile mark, mid 60s. So it's amazing to see. We've done it previously, and we can't, past history is not indicative of future performance, but we do the same thing every time. We've standardized these practices, and we look for the opportunities, and we conservatively underwrite, and our goal is to beat what we say we're going to do in the pitch deck, in the deal disclosure memo. So great questions. Any other questions I can answer before we wrap up for the day? We appreciate you spending 30 minutes on this beautiful Wednesday afternoon with us. It's a great day here in Texas. The weather was fantastic. So I hope the weather and everything is good for you where you're at today. We do appreciate it. And this will be sent out as a replay as well. So for you that are watching on the replay, thank you for tuning in. So great. We'll talk to you all soon.